afternoon. This is all about Bitcoin, a show dedicated to all things, questions, and markets related to Bitcoin. Little b for the currency and Bitcoin, big B for the network. A collective journey to understand, apply, and use this innovation. All Bitcoin, all the time. I'm your host, Christine Lee. Let's have a live look at Bitcoin. The Coindesk Bitcoin price XBX index currently trading at 46,483. Bitcoin is up almost 5% over the past 24 hours. The most reliable reference prices for institutions since 2014 are now published under the Coindesk brand, trusted globally as the leader in crypto news, events, and data.
The chart of the day is brought to you by Crypto.com, the world's fastest growing crypto app.
So Bitcoin rebounding from Thursday's 2.4% drop that saw BTC reach a low of around 43. Bitcoin is beginning to edge closer toward analysts' projected $50,000 resistance levels. Exchange CoinJar telling Coindesk they're seeing, quote, many investors taking advantage of recent market movements by taking trend of conservatism among users who jumped into crypto around similar price levels earlier in the year, with users slightly trimming their holdings. Indeed, Bitcoin's total daily volume across majors, including Bitstamp, remains flat when compared to previous months, particularly towards the end of May. Yet seasoned investors are increasingly active with data at a strong uptake in altcoins beginning around August 9th, according to Australia-based exchange Easy Crypto. CoinJar adding they're starting to see a trend of users swapping Bitcoins, which has been a catalyst for the recent appreciation in their price. And joining me now to discuss BTC price and other Bitcoin news is our Week in Review panel, Coindesk Managing Editor of Technology, Christie Harkin, Toronto, and Managing Direct Editor of Markets, Brett Keoun. Hey there, Brad and Christie. Always good to see you on the end of the week.
Hello.
Absolutely.
Friday.
Absolutely.
Friday.
Brad, looking at the markets, we're making higher highs. What kind of data are you seeing support and resistance?
Well, we've had this pretty powerful move, out of that 30,000 to 40,000 range we're in for a while. And this past week, we've definitely moved into the 40s. And pretty much by all accounts, it's kind of rejuvenated the bullish mood for Bitcoin. People saying that, there's buyers at these levels. Right now, we're at a crucial level on the price charts, which is the 200-day moving average, which is right around $45,000. We're right above that right now at about 46,000. And analysts are saying, if we push above 47,000, that could take us up to 50, which is a kind of a key psychological threshold.
And zooming out to the larger macroeconomic picture, what kind of economic data are we looking at with the new consumer price index numbers that were released this week, as well as the latest with the Delta variant? Is that threatening the economy in any way?
Well, the CPI report that came out this week, it was actually a little faster than most people expected, although it represented kind of an evening or a stabilization with the pace that we saw in June. Of course, nobody knows. We've never seen an economy like this coming out of a pandemic where everybody's been on these lockdowns. And now we're going into the potentially another wave of lockdowns with the Delta variant. But, people trying to gauge what is the impact of these prices, what is really happening with inflation. And people are saying that it looks like things are stabilizing, and that might show that the Federal Reserve is right that when they describe inflation as transitory. Not everyone agrees, because if you kind of dig into the data, you find that there are some drivers within the inflation numbers, like rent, that might be more sticky than just some of the transitory stuff. But all things being equal, it means that the Fed is probably, not as much pressure to taper its asset purchases, which might mean that risk assets like Bitcoin, stocks, everything have further room to run.
Interesting. Of course, the story of the week had to be the infrastructure bill being debated in U.S. Congress. So the U.S. Senate decided to pass a $1 trillion infrastructure bill meant to fund trains, infrastructure, transportation throughout the country. But in it was a crypto provision that expanded the definition of a broker to potentially include miners, node operators, validators for crypto tax reporting purposes. Now, there was a compromise amendment that was agreed upon by a bipartisan group of lawmakers, but that needed unanimous consent. It needed no objections. And out of the sidelines, a lone senator, U.S. Senator of Alabama, Richard Shelby, decided to object to it because he wanted to have his own defense military spending amendment passed, and no one would agree to it. So he just objected to every other amendment that came on the Senate floor. So unfortunately, a sad set of circumstances for crypto advocates who are really hoping for that provision to pass. And there was a lot of Twitter chatter, Christie, that a potential overregulation of the United States could drive miners out. But the U.S. is actually seeing a lot of miners coming in, right?
Well, yeah. I mean, I think that miners in the U.S. are still feeling pretty confident that some sort of compromise or adjustment will be worked out in future legislation or guidance. Certainly the shareholders of mining companies haven't been scared off. As Coindesk's Nate DiCamillo reported earlier this week, mining stocks were actually mostly up, some of them by double digits. So that is looking optimistic. We're also seeing a lot more hash rate being brought online. And all of this is good considering this week also China announced a 5-year plan to keep on intensifying pressure on the mining industry. So we're not going to be seeing mining going back to China anytime soon. So this week, the things that we've seen go up, the difficulty rate has gone up for the second difficulty period in a row, 7.3% in the last 2 weeks. So that is an indication of the hash rate going up. The hash rate is the amount of computing power that's used to mine on the Bitcoin network. And the network hash rate dropped at one point to a low of around 76 exahashes per second after China began cracking down earlier this year, April to July. But since then, the industry has been rebounding. It had a big logistical scramble to try to relocate miners, but already many miners had been purchasing new equipment in North America, and miners have been finding their way across Central Asia to relocate there. So as these miners are being brought online, we're getting much more of a hash rate, which is more security for the Bitcoin ecosystem. And it's still very profitable for miners, especially the ones that are still online, to be there.
Right. Brad, you're also noticing a pattern of Asia to U.S. investment in the crypto markets, right?
Yes, we've had two stories over the past couple of weeks based on blockchain analysis firms looking at trading patterns and blockchain transfers. And you can see, if you look at the data, you can see a shift in trading also. China also has had a crackdown on crypto traders. And you can see some of those patterns moving more towards European and U.S. trading hours. So that's pretty interesting. For the 24/7 market that Bitcoin is, for us to see that big of a shift.
That was something that we noticed this week, that China is tripling down on a tech crackdown, saying that they want a 5-year plan to regulate tech industries and the environment. And when we saw a crackdown in China on mining, the Bitcoin market, the crypto market went down. Yet when US regulators start talking about crypto, we saw the markets go up. So, Brad, there's still a lot of strong sentiment despite a lot of regulatory scrutiny in the United States over crypto.
It's true, Christine. We talked about this last week where, it just seemed like this is a market that wants to go up right now. Suddenly the charts are turning a little more bullish and we've broken through some key levels. And, ultimately the market is buyers and sellers, and people are buying at right now, below 46,000 and maybe selling above 46,000, so I think people don't quite know what is ultimately going to be in that bill. So maybe that's part of it. Other people saying, people have been asking for regulatory clarity for crypto for a long time. And even though there's a tax here, maybe this is the beginning of crypto regulatory clarity. And in fact, if you kind of listen to some of the leaders of the blockchain lobby, they're trying to make it clear to the community that they're going to try to get a longer term fix through legislation, even if it doesn't, go their way in these next couple, in these big spending bills.
Well, that infrastructure bill, it now heads to the House, and a lot of House lawmakers are chiming in saying that they do want to curtail that crypto provision to make sure that brokers, or rather non-brokers, are not considered brokers in this infrastructure bill, and that should include miners, it should include node operators and validators and such. We also had a slew of bullish news throughout this week. AMC, giant theater chain in the United States, will accept Bitcoin as payments for movie tickets and concessions this year. PNC Bank also saying that they're going to offer crypto investments to their wealthy clients. And Christie, also news of a big developer grant courtesy of FTX just now.
Yeah, FTX has been in the news a lot lately for various things, but I love these stories. So FTX, the cryptocurrency exchange run by Sam Bankman-Fried, is committing $150,000 a year for the next 3 years to Brink, an organization that helps to fund Bitcoin's open source developer community. So in order for Bitcoin to grow and develop to its full potential, it's important that companies that rely on Bitcoin, the Bitcoin blockchain, for businesses to contribute to its development. After all, Bitcoin is a decentralized project which primarily is being worked on by volunteer coders. There is no Bitcoin company with a CEO and HR division who hires developers. So the people who do it, they do it because they know it's important and want to help contribute and maintain this massively important project that so many businesses rely on. So some companies have been supporting this work financially through individual grant programs. Brink is different because it's an organization that helps companies administer these grants. Like, give us the money, we'll take care of making sure it goes to the right people, the right places, in the right amounts. So FTX is giving Brink $150,000 to do just that. And over the next little while, it'll be good to see what it is that Brink comes up with as the projects and the contributors that it wants to, that it decides to support with the money.
Awesome. Great to see some development in the space.
Yeah.
And looking ahead to next week, this Sunday, August 15th, will be the 50th anniversary of the end of the Bretton Woods currency system. And just to remind viewers, after World War II, major nations essentially agreed to peg their currencies to a gold-backed dollar. But by 1971, faith in the U.S. dollar was eroding, forcing then President Richard Nixon to, in that scary photo there, to end the dollar's convertibility to gold. This ushered in the current status quo of relatively free-floating fiat currencies. And we have David Morris writing that article we see there. And that's just a teaser on Coindesk.com. Coming up, he's going to have a 3,000-word article on the viability of various currencies as central bank reserves, including the euro, the Japanese yen, the Chinese yuan, as well as Bitcoin. But interesting reflecting upon this anniversary, Brad, in terms of as we enter a era of digital finance, how do you feel this new oncoming wave of finance reflecting up on Bretton Woods all coming together?
Well, first I'll say I'll have to carve out a couple hours to read those 3,000 words from David Morris. Bretton Woods was the agreement coming out of World War II when all the European countries were heavy in debt and, the U.S. was just becoming kind of top dog in the world. And they agreed on the dollar to be the monetary standard. It would be backed by gold. And then, because of pressures, on U.S. finances, Nixon was forced to take us off of that gold standard. And since then, the dollar they say the dollar is backed by the full faith and credit of the United States government. But really, that doesn't mean anything. It just means, if you try to tender a dollar to the U.S. government, all they'll really give you is another dollar. Our director, our executive editor, Mark Hochstein, talks about how crypto may not have all the right answers, but it's asking the right questions. And this is just, one of, many questions raised by the emergence of cryptocurrencies, which is, what is the dollar worth? Bitcoin is up 60% against the dollar this year. Put another way, the dollar is down a lot versus Bitcoin this year, so people say Bitcoin's not backed by anything, but on the other hand, it's outperforming the dollar in global financial markets. But yeah, anniversaries like this are always a good time to sort of sit back and think about how the system is set up.
Christie, Bitcoin, the next reserve currency of the world. I've asked this question of a couple of people. I did get a yes from Anthony Scaramucci from Skybridge Capital, who also infamously lasted 11 days in the Trump administration.
What I really love is the fact that right now, here we are, 12 years out, and we're already talking about this as a potential. But that's what I love right now about where we are in Bitcoin is the potential for it to be so many different things, and we're still feeling it out. It's still early, and as Brad mentioned with Mark Hochstein, that we're asking all the right questions. And one of the things regarding the reserve currency that David Morris points out is the interest in the idea of Bitcoin as a potential reserve currency has exploded since El Salvador first dipped its toes in. And he suggests that the interest in it as a reserve currency is going to be pushed up from countries with weaker currencies like Argentina and countries that are looking for alternatives and are open to the idea of, what we have isn't working. Let's try this. Do we want to be beholden to a superpower's currency that we have to just cross our fingers on, or can we try something different? So that's where he suggests to look for the next major wave of Bitcoin adoption, smaller nations with troubled currencies or histories of monetary mismanagement. And I think that the potential there is, they say, it's never going to be used for this, that, and the other thing. It won't be used until, we're going to have countries using it. And once you have that established, it's a really good way of sort of almost like there being the test net for the world reserve currency.
Fascinating question. And we're going to see how that develops in the future. And that's what I love about Bitcoin and the whole wave of Web 3.0 digital finance. All right, we've got to end it there, Christie and Brad, but thank you so much. Happy Friday. Have a great weekend. That was our Coindesk Week in Review panel with Christie Harkin in Toronto, as well as Brad Keoun in Austin. That's it for All About Bitcoin. I'm your host, Christine Lee. We'll do it all over again on Monday at 3 p.m. Also, join me Monday morning at 9 a.m. in New York for First Move, or your first look at the day's global crypto news headlines. You're watching Coindesk TV.